Good evening, Oak Bloke here, and this is going to be a little just sort of look at. I was looking at the videos I've recorded, and I've my YouTube channel. I've now got. What have I got? I've got quite a few videos, I think. Let's have a look. I've recorded. Um, does it tell me? 124 videos, which seems an inordinate number of videos. So yeah, so this is going to be 125, just like the Intercity. Um, and I guess what I was just sort of looking at today was copper. Um, Copper broke through to 13,000 a ton, and I was looking at just various different companies that have shot up. I mean, copper is now the vogue, so there's quite a few um, copper miners that you'll pay a pretty penny for. So I thought, well, is there a way of not paying a pretty penny? And then something caught my eye, and something was this. So I was surprised actually today to see that this had dropped about 7%. So I already hold it, but I bought some more. Um, and why did I do that? Well, um, as you can see here, metals exploration. I mean, people know it as a gold miner in the Philippines, and if you know it a little bit more than that, you'll know that it's also bought a gold mine in Nicaragua, and it updated quite recently, actually, to say that they were making good progress. They were ahead of schedule. They've ordered all of the large capital items. They've got to run I think it's 200 kilovolt power line, and that's going to happen in June this year. So in about 4 or 5 months' time, they're looking then to basically start coal commissioning, and first gold will be late this year. First gold from Nicaragua, and the Nicaragua La India is a real doozy. I think is probably the technical term. So if we look at La India economics now, bearing in mind that this is based upon an 8.4 year life of mine, 71,600 ounces, and this is based upon gold at 2,500 per ounce, which of course is ridiculous. I mean, you can basically almost double that, not quite. It's about 4,400 today. Um, but you can sort of see, the IRR of 71% is going to be an IRR into triple figures. At 4,500 gold. So no two ways about it. The 2.56 grams per ton. Um, some really nice metrics here. And as you can see, I mean, the capex, 116 million. I mean, this is one of the beautiful things about Condor, well, as it was called Condor, and Metals Exploration bought Condor, was that Condor had already done a load of the stuff that needed doing. So they'd got the DFS, they'd done quite a lot of the preliminary groundwork. So it was kind of not ready to rock and roll, but it was sort of halfway there. So Metals Exploration have been working on this now for 12 months. So it was sort of late, I think it was late 2024 when they bought Condor. I was actually a Condor shareholder, and I was a Baker Steel shareholder. So Baker Steel Resources Trust hold Metals Exploration, and Condor. Well, yeah. So it was it was better to buy Condor than it was to buy metals exploration directly. And what was going to happen was you were going to get a slug of cash from metals exploration plus shares in metals exploration. So that's what I did. But then with a further tickle that if they define a larger resource at La India, and I think that is just a matter of time. Then there's a further tickle, and there's sort of two tiers of that worth another 15p a share, I think it was, something like that, 18p a share. So anyway, the thing that struck me today was that this had pulled back to 14p a share, which, considering it's recently been at 16p, I thought, well, why has that dropped back? And there was just no reason for it. It was just sometimes these things happen that you kind of for whatever reason people take their eye off the ball, or they get bored, or I don't know. It's inexplicable when gold has gone up today and copper has gone up today. So we're going to talk about copper in a minute. Um, it's inexplicable that this should have dropped 7%. But hey, I'm not complaining. I swooped and bought some more. And for me, that is averaging up. It's I hold MTL at far less than 14p actually. But I thought, no, I'm going to get some more because this is a really good price. So let's kind of get into what my decision. Um, so so I guess the things that I would say about metals exploration, if you look at its recent history, it had quite a few bad lucks. And I think this article that I wrote, Metal Mickey, back in November, I have sort of gone through and just started just changing a few numbers to kind of update it. Um, to today's prices, but probably there's some references that are, that EV was the enterprise value at the time, so it's I think the EV is probably a different number today. But yeah, it gives you an idea, and then yeah, so it was Condor 9.9p a share, and you get 4 shares in metals exploration, and so on and so on. So that's all sort of history now. So I sort of got in at 11.1p a share. So I've averaged up by a couple of pence, I guess, today. And then yeah, there's the upside. So yeah, so I guess in this article I've updated it today to be 4,400 gold, and kind of reran the numbers essentially. So let me just show you what those numbers look like. So we go in, and so basically what I've done is I've just changed these numbers here. Now this is Nano, which is in the Philippines, and down here this is La India, which is in Nicaragua. These are, now we don't have the exact 2025 final results yet, but it's going to be something like that, and something like that, and something like that. So the net profit for the year is 36, something going to be something like 36 million, I think. First half it was 16 million. So you can sort of see there's just a little bit of a jump uh, in 2026 if they can produce that level of production at that, and if today's gold price is typical for the rest of 2026, which it may or may not be, and if the AISC remains at 1325, which it may or may not, obviously, as this run is run outing, there's about 15 to 18 months left of resource, and then they're shutting it down. So yeah, there's kind of you can sort of see here 75,000 and then 20,000 approximately of gold left to mine from Run, and then they're gonna do something else with the mine. Right, so nearby to the mine is a copper prospect. So we'll come on to that in a minute. But this alone, I mean, you can sort of see, potentially something like 200 million dollars of net profit at today's prices. And obviously, if prices keep going up, then it could be higher still. Um, but that AISC includes depreciation. So what I've also done is just factor in the stuff that's non-cash costs. So from a funds availability point of view, so obviously depreciation is a non-cash cost that the sum total of those net profits over last year, this year, next year comes to that, plus the depreciation, plus just what their net assets were or net current assets were. So like inventory and cash in the bank and so on, and you kind of get to something like 400 million US dollars. Now, the La India is going to require about, as you just saw, 115 million of capex. So they're funding it out of existing um, reserves of cash, essentially. And as I say, the first gold pour is going to be late 2026. So I'm assuming there's no production to speak of, particularly this year. But next year, we're going to see, and again, I'm sort of assuming that we're going to sort of see a phased ramp up, and it's not going to all be sort of, it's not going to, essentially it's going to slip 6 months is what I'm assuming in first year, and then it sort of grows to its run rate in years 2 and 3 and beyond, obviously. But again, you can sort of see here, I mean, the run rate at that level of gold and this AISC 1176, I mean, it is going to be a low cost of production. 1176 might actually be too high. In a video, in an interview with, I think it was Crux Investor, they speak of potentially 900 dollars per ounce ASIC. So I've kind of again just assumed the worst a little, or not the worst, because it could be higher than that number, but that's kind of a fairly I think there's a degree of safety in that number, is what I'm saying. Okay, so obviously, when we sort of take both of those together, what you're seeing down here is that this translates at $1.34 back into about 6p of earnings. Now, bearing in mind that this is a share that you could buy for 14.2p. That yeah, you've got like about 6p of earnings here, about 5p next year, and then 9p in the year after. So that kind of puts it on a price earnings of about 1 to 2 times. So that's really cheap, as you can think. But that's not the whole story. So if we go and let's just move that out the way. So what I'm going to just cover off next is the bit that I think the market has missed, which is um, the Run Renault. Once the Run Renault mine, once the Run Renault resource has run out, what they have is potentially have a target 20 kilometers away where they're doing drilling, and there's test results coming out which may or may not prove to be economic, but the you can see it here, the high grade potential surface trenching and rock chips returned 7.5% copper. Now, just think about that. So if you've got 7.5% copper at 13,000 a ton and you're recovering, let's say, 92% of that, I mean, the economics of that is just staggering, absolutely staggering. I mean, it's not guaranteed that it's going to be 7.5 throughout, and it might not be as good as that. But if it's anything like as good as that, or even just 50% as good as that, or even, well, I mean, I'd take 10% because you go and look at the grade of copper from some of the, major mines of copper mines of the world. They're running copper at about 0.4%, 0.5%. So 7.5% is pretty exciting. And then you've got 15.4 grams per ton of gold. I mean, again, that's like half an ounce per ton of ore. So have a think about that. I mean, if you're putting through what, I think their capacity is something like 500 tons per day. I mean, that's 250 ounces a day if they if the resource is 15.4 throughout, which we don't yet know. But if this comes back with any kind of positive result, I just think 14.2p is the wrong price, absolutely the wrong price. It's the wrong price even without the copper, because those numbers I've just been showing you are my estimates of just the Run Renault gold and the La India gold. None of those numbers included copper. No, nothing at all. Nothing at all. So and Dupax isn't the only shot on goal. They've also got Domingley, but I don't know how to pronounce that, Bellini and Manica Bell. So the Abra project, or the Abra region, is colossal. This is like a really long-term project. I mean, this is like potentially a tier one project that they would sell to, you know, uh, BHP or somebody like that, one of the tier one, one of the tier one producers. It would be too big for metals exploration, probably, but that's not going to sell for zero, and that is nowhere in the price. So, so yeah, that kind of for me seemed to be the bit that was missing today, was that whilst we don't yet know that there's going to be a result, there's drilling results that are going to be released this quarter. So sometime in the next couple of months, we'll know the truth of Dupax, um, and it appears to be positive, as in the samples and the rock chips returning those kind of levels. And also there was I think a historical. So decades ago, the Philippine government only drilled um, only drilled 120 meters deep. So the new drilling program, this 2,500 meter program, I think they're going down far deeper, whether it's 300 meters down or something like that. But they went 120 meters down and they found 60 meters at 1.1%. Now, obviously, that's far lower than 7.5%. Like I say, it's 7.5% is exceptional. Um, but they found a high grade pocket of 7 meters at 4.7%. So, but 60 meters at 1.1, I mean, that again is very good. Obviously, there's more to it than just the length. You've got to think about the width and the yeah, the other sort of factors in forming a mineral resource estimate. But yeah, the evidence appears to be quite encouraging. Let's put it like that. So we'll see. And as I say, I mean, whilst these numbers were run at 3,000 an ounce in my article in November, the world's changed in the space of what, 2 months, and the gold price now is not 3,000; it's 4,400, and you can sort of see the amount of difference it makes. So the net profit of 155 has grown by 100 million. I mean, that sort of gives you an idea of the scale of the change. Is that post, estimated post tax is kind of something like 100 million more than it was back in November. And when you consider that back in November, I mean, the share price what here was what 12.5p, so it was sort of what 10%. It's grown 10% when gold prices have grown far more. I don't know whether I just didn't update the gold price or I was being a bit careful on assuming that the gold price would remain or something. I don't know why I've got 3,000 in there really, but if we see if I can just put gold in here to just let's just add. No, I don't want that. I want gold, something like a gold ETF. Physical gold. Where are you? Physical gold. That's all gold miners, gold mining. Well, I'll tell you what. Let's just pop it in there, just to kind of give you an idea. So there we go. So in the past 2 months. Oh, okay, that's interesting. So looks like we should all be looking at SPGP as well, from the looks of things. But okay, that's not kind of what I was used to be able to go in here and get. I don't know. Maybe let's try typing in physical gold. Physical gold. Here we go. Gilda. That'll do. Okay. So in the space of time since November, it's saying gold has only increased by a very little amount. So yeah, I think my article must have just had the wrong price of gold on it or something, because that's what I put in there was 3,000 an ounce, which just seems a bit crazy. Anyway, as I say, I mean, like India's on track, so that's another positive. And I think the other thing to sort of talk about is that the whilst this is the feasibility study numbers here, so so as you can sort of see the numbers there. There is a wider prospectivity to La India, and there's so the initial is India number one, which is somewhere in all of this, I think there in the center. But you've got a wider regional where you can sort of see there's prospectively 12.6 million ounces. So the number one, which is 1.2 million ounces, is what 10% of the 10% of the possibilities with La India. And I think you've also got a um, couple of other uh, projects as well in Nicaragua as part of they're separately physically separate from La India. There we go. It's these Estrella and El Rio Luna, which again, is just early stage sampling, trenching. But you can sort of see, 8, 11, 5. So interesting. Um, just sort of stuff right totally in the middle of the jungle somewhere. Whereas I think the difference is with La India, it was just off a main highway, 200 meters from the main road, and so a lot easier to develop, a lot easier to bring to production, which is why the capex was so attractive. I mean, if you look at this. Yeah, so the capex $122 million here, and that's for a combined open pit and underground within the project. So that's so that's kind of where the basis for me deciding to buy a bit more MTL today. So I hope that's been useful. I think that kind of is everything I was intending to cover today. So if you enjoyed this, the article itself is on my Substack already, so theoakbloke.substack.com. And Thank you for watching. If you wouldn't mind doing a sort of like and subscribe and all of that fun stuff, that would be much appreciated. And you can subscribe to my Substack as well if you haven't already. And thank you again for watching. Cheerio for now. Cheerio.